Hello, this is Japanese Economic Review Channel. Today, we will examine the historic structural shift in Japan's labor market as of June 2026. Backed by the latest preliminary data from the Ministry of Health, Labor and Welfare, we are observing a crucial transition. Household purchasing power is finally recovering as wage hikes outpace inflation. We will dissect the nominal and real indicators driving this turning point and explore what it means for businesses. Let's look at the executive dashboard. In June 2026, nominal wages reached an average of 531,677 yen, representing a robust 3.4% year-on-year increase. More importantly, real wages turned positive at plus 1.6%, signaling a genuine expansion in consumer purchasing power. This is supported by a stable 0.8% growth in regular employment. Together, these metrics indicate a healthy, self-sustaining economic momentum. How did we break the inflation barrier? While consumer prices rose 1.9%, nominal wages jumped by 3.4%, yielding a 1.6% increase in real wages. Furthermore, if we use the International Standard CPI, including imputed rent, which grew 1.7%, Japan's real wages actually rose by 1.7%. Under both metrics, the result is clear. Japanese workers have officially reclaimed their real purchasing power. Let's dissect the typical June paycheck of 531,677 yen. This contains three main components. Scheduled base pay grew by a solid 3.4% to 279,189 yen, proving that structural base-ups from spring negotiations are fully active. Overtime pay rose 2.8% to 20,043 yen, while summer bonuses rose 3.5% to 232,445 yen. This dual growth in monthly base pay and seasonal bonuses provides highly resilient cash flow for families. The underlying wage momentum is actually stronger than the headline average. When we isolate common establishments, businesses surveyed in both 2025 and 2026, nominal wage growth spikes to plus 4.4%. This reveals that active, established businesses are aggressively raising pay, with general full-time workers receiving a 4.5% boost. Stripping out sample rotation noise shows the true depth of Japan's wage hikes. Next, let's contrast general and part-time workers. Full-time general workers averaged 715,604 yen, up 3.6%. Part-time workers averaged 129,042 yen, up 3.5%. However, part-time hourly wages surged by 4.3% to reach 1,444 yen. This steep hourly growth shows that severe labor shortages in retail and services are forcing businesses to pay a premium, shifting the balance of power toward flexible labor. Despite positive averages, we face significant polarization. Knowledge-intensive industries are thriving, with scientific research at plus 11.7% and finance at plus 11.6%. On the other hand, construction fell by 1.2%, real estate dropped by 4.7%, and mining contracted by 9.7%. This industry gap means high-margin and price-transferable businesses are surging, while other sectors face severe pressure. We are seeing a major shift toward productivity. Total actual hours worked decreased by 0.3% to 139.2 hours, while overtime remained completely flat at 9.7 hours. Crucially, part-time hours fell by 1.3% to 79.8 hours. This proves that wage increases are not driven by working longer shifts. Instead, Japanese firms are transitioning to a high-value model, paying higher compensation for more efficient hours. Let's look at employment. Japan's workforce expanded by 0.8% overall. However, the composition is changing. The part-time pool grew by 1.4% to 16.4 million workers, outperforming the 0.6% growth of full-time workers. As a result, part-time employees now represent 31.43% of the total workforce. This rising ratio highlights the economy's heavy reliance on flexible, yet increasingly expensive, labor. In a global context, Japan's real wage rebound is highly competitive. While U.S. real wage growth slowed to plus 0.8% and Germany contracted at minus 0.5%, Japan's real wage expansion reached 1.6%. When using the international index, Japan hit 1.7%. This turnaround highlights Japan as a recovering, resilient market, signaling a long-awaited exit from wage stagnation on the global stage. In conclusion, we must monitor three key macro trends for the second half of 2026. First, will positive real wages persist when summer bonus season ends? Second, the irreversible 4.3% surge in part-time hourly wages demands that companies invest in automation. Lastly, polarization is real. Leaders must redesign compensation to secure talent. Remember, final revised data is due August 24th. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.